What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, I share with you the stocks that are at the top of my watch list going into Monday morning. I'm also going to share with you how I feel about the general market conditions. Here's everything you need to know. Let's go. Okay, so just to get us started, welcome to week 32 of my weekly watch list. As always, there's links down below in the description of this video for my free stock market fundamentals course. Over 9 hours of content, completely free when you use that link and sign up for Skillshare. There's also a link there for $50 in free trading commissions on Questrade, as well as a link to join my Discord chat. But let's dive right into the markets. This is the NASDAQ chart from this week, and as you can see, it's a little bit of choppy trading. We did a nice, beautiful run up to 14,175, and then we had that kind of like panic 2 weeks here where we fell back down to 12.5. Over the last sort of 2 or 3 weeks, we had a nice little bump up to 13.5, and then this week, kind of Tuesday, Wednesday, were very red days for the market. Thursday, Friday were better for the NASDAQ, but we still closed lower this week than where we opened with regards to NASDAQ and most of technology. However, when you look at the S&P 500, it was a completely different story. Thursday was a green day, and Friday was a massive green day, taking us we're within like 1 or 2% of our all-time high on the S&P 500. So if you look at the market in terms of the S&P 500, you would say we are doing extremely well, and it's the exact same story with the Dow Jones. Thursday and Friday were absolutely beautiful days, and again, we were within 1 or 2% of our absolute all-time high on the Dow Jones. So if you look at industrials, if you look at dividends, if you look at real estate, if you look at any of these sectors that aren't high-tech growth, most things are doing well, especially banking. So lots of different dynamics happening in the market right now. And when you look at Bitcoin also had an absolutely phenomenal Friday. Bitcoin trades on the weekend. So this little one here is Saturday as I make this video, and this big candle here is Bitcoin's run up on Friday. As you can see, it was a nice turnaround on the RSI, and the MACD looks like it may cross over soon. We'll see how that goes. I'm really looking for the break of 62.50. That'll be an all-time high here, but it was a nice bounce off of kind of 51.5, and that's a consecutive higher low, so that's a good sign for Bitcoin. I'm actually still pretty bullish on Bitcoin at the moment. Now, when we look at COVID, it's a little bit different story. Yesterday, we actually crossed above our 7-day moving average by a decent margin compared to the previous kind of 2 months, so that's not a great sign. The cases are still much lower than they were back in January and December, so that's nice to see. Hopefully, we don't see a third wave. It sounds like the vaccine's rolling out pretty well in the USA. We do have a bigger spike here in Canada, though, over the last kind of 1 week. We have significantly crossed over our 7-day moving average here in Canada, so not a good sign. Couple different dynamics going on in this particular topic as well. Now, earnings coming up this week. There's no major names coming out with earnings this week. You do have BlackBerry as well as Micron Technologies here, and then one company that kind of caught my eye was Chewy. So I want to share this chart with you because I hadn't heard of the company before. I just kind of did some quick due diligence on it. The chart looks like there might be an opportunity here, and I just want to share it with you. So this is Chewy. I'm going to keep an eye on them going into Monday. We've got some pretty clear support right here around 70 to 75, and as you can see, the stock has ran up from 70.75 all the way up to a high of $120 before coming back down to this same sort of level right around the 78 level right here. So lots going on. Chewy sells pet products, and what I liked about this company when I went through their website is that they offer 1 to 3 day shipping, so they can compete directly with Amazon, but they're much better branded around pets and pet products. They have a price to sales ratio of 5, which I thought was reasonable because they have 35 to 45% year over year growth, meaning that from 2017 to 2018, there was about a 35 to 45% growth in their revenue. Same thing to 2019, and it looks like 2020 is going to be the exact same thing. They do report earnings on Tuesday, so I'm looking forward to this, but I am considering taking a position because the stock is down 35% over the last 6 weeks. It's trading on some support right here, and I think there could be an opportunity. The next company that I'm very excited to tell you about, though, is Fintech Acquisition Corp 5. I don't know if that's the right way to say it. I actually don't know if that's a V or a 5. I think it's a 5. I got to figure that out. But the reason that I like this company is because it's a SPAC, and they're about to merge with a company called E-Toro. Now, I just read the press release about this merger a couple of days ago, and I'm super excited about it because E-Toro is a stock trading platform and brokerage, and they're actually one of the first platforms and brokerages that I used here in Calgary, Alberta. I used it for about 2 or 3 years, and it was my absolutely favorite platform that I have ever used. If it was still available in Canada, I would still be using it. Unfortunately, it's not. The SEC found out that they weren't doing something correctly, or they didn't have the approvals to operate in Canada, and they had to basically ban them from Canada. So unfortunately, they're not available in Canada anymore. They are available in the US. They do about $605 million in revenue in 2020, and this one would be probably a long-term investment for me because I absolutely love the platform E-Toro. It's just amazing. And so let me tell you about it, because it's kind of like a combination between Robinhood and Facebook. So Robinhood allows you to trade super easily and it's really easy to use, but Facebook is a social network, and eToro is the combination of both of those. And so you can add people and follow people kind of like Facebook and Twitter, and they can see what you buy and sell. So it's really interesting because if you're a professional trader, or you're me, or you're somebody else, you can make your trades and it's very clear to everybody else what your performance is month by month, what stocks you're trading, what stocks you're holding, and everybody can see everything, which is absolutely revolutionary and completely different than every other platform. On most of the securities, they're also commission free, and the amazing thing about eToro is because it's totally open like that, you can copy trade, meaning that if I had an account and I was trading day to day and you liked the trades I was making and I had a good return on investment, you could invest $100 or $1,000 or $10,000 and you could copy my trades with that money. I would make a small percentage if I made money on it, and you would get the exact same return on investment minus that little commission that I'd make. So absolutely amazing platform. They're going in at a $9.6 billion valuation. The platform's not available in Canada. I strongly encourage you to do some due diligence on this. I am like 90% sure I'm probably going to be buying it this week, just because I absolutely love the platform, the idea. It's different than everything else out there, and I just think it's an amazing, amazing concept. And if you look at the stock, it hit a high of $15.70. It's dropped all the way back down to $11 or $12 here. If you can get it in at $12, I think it's a great opportunity, because I like this platform 10 times better than Robinhood, 10 times better than Wealthsimple. Anything out there, I think eToro is better. So that's my personal opinion, but let's talk about Adobe. Now, I shared this chart with you on March 13th. It was about 2 watch lists ago, and as you can see, the basically stock dropped down to 420, came all the way back down, and then you had a couple 4 or 5 days here where it looked like we were seeing a pretty clear bounce. The MACD was about to cross over, and the RSI had just come out of the oversold zone. So all positive signs. That's why I shared this chart with you. And if you look at the chart today, the stock is now at $470. The MACD has crossed over. The RSI has come out of the oversold zone. We have crossed through our moving average, and we had a beautiful close on Friday, because this is a fantastic company that people know is secure. They have a subscription model. They have annual recurring revenue at very impressive rates, and it's a great company. And if you had taken the trade, you would have made a nice, quick and easy kind of 5% there. Pretty easy on a big, massive, almost blue chip company like Adobe. Now, switching up from a big company like Adobe, we're going to a very small software company called Real Luck Group. I currently have an investment in this company, and I like this company because they do sports betting, but they also do it for gaming, and gaming is actually the main focus. They do have both options between real sports and gaming, but the platform is set up for gaming, and they are one of the main players in the space. Their revenue is growing exponentially, and I really like the business model, because I'm very bullish on the gaming industry. I think that is going to grow exponentially, especially as technology evolves. It opens up the amount of people that are going to be interested in gaming, and Real Luck Group gives you the ability to bet on the gaming, the tournaments with your friends, whatever you want to do. This is going to be the platform and hopefully the brokerage that people use to make the bets on gaming. So I'm really excited about the company long term. It might be a little difficult to swing trade. It doesn't have massive volume right now, and as you can see, the volume has really dwindled off right here. It had massive volume in February. It's kind of tailed out a little bit. We'll see. That has also happened in another example we're going to talk about later on here. But as you can see, it had a nice, beautiful green day on Friday. It dipped down on Thursday. It got bought all the way back up. I think it's got some support right around the $1 level here. And if we see a clear bounce, I think it's a great opportunity. Wait for it to break the moving average. Wait for it to break above $1. I think it's a good opportunity. I like the business model long term because it's in a great industry and they have a nice way that they make money. Okay, next company I have my eyes on is Google. I've been watching this company for like 6 months now, and it just hasn't taken a drop or taken a hit and given me an opportunity to buy in. I was considering buying in off this bounce here. I missed the trade, and now it gapped up, and now it is completely consolidating for pretty much the last 2 months right within this channel. So now what I'm watching for is for Google to fall down out of this channel and maybe take a short play and then buy back in at 1800. Maybe take a little scalp position here when it drops below 2000, or if it breaks above the 2150 zone, that could be a breakout trade, and you may want to get into that with a trailing stop loss. So I'm watching Google right now. I don't know exactly what the move is going to be. I think if it drops below, it's going to be a very short-term scalp trade. If it breaks out above, it's probably going to be a swing trade that I put a trailing stop loss on. But I like Google just as a company. This is a great place to put your money, and as a long-term investment, I think this is one of the best tech companies you could invest in. And if you look at this stock chart, it has absolutely no correlation to the NASDAQ, which is absolutely kind of amazing and a little bit strange. But Google is completely breaking the trend of all the other tech companies right now. If you look at Facebook, if you look at Square, if you look at Amazon, if you look at any of those companies, they have taken massive hits. Maybe not massive. They've been extremely choppy over the last 2 to 3 weeks. And if you look at Google, it has been extremely steady, and it's only going in one direction so far. So really, really interesting trend dynamics where Google's going one way and the market is choppy right here. So I've got my eyes on Google. I'm waiting for either a breakout or a breakdown. Next company I'm looking at is Good Food Company. Now, I really like the business model here, but the chart is a little bit tricky because we had this massive breakout here up to a run of 1400, and then you could say that we actually had a triple top here, once right here at the beginning of January, once in the middle, and then once at the end right here. Since then, the stock has basically trailed all the way down, staying almost right below the moving average, and then since then, it has bounced off the $8 level in December, and I'm expecting another at least level of support here at $8. If it falls below $8, it's probably going down to $6, but if we see a bounce off $8, it could represent a good opportunity to buy a bounce, a breakout, and see what happens next. But if it falls below $8, the next level is going to be $6. I think there's probably a 50-50 chance of that right now. Now, another company in the food space is Beyond Meat, and as you can see, this company bounced off 120, went to 220, came back down all the way to 129 today. I think we're going to see some support at 120. If we see another bounce off of support at 120, I'm probably going to be a buyer because as you can see, 120 has acted as support right here in June. It acted as support for about 2 months in August and September. It acted as support right here in November, again at the beginning of January, and now it's probably going to act as support again. So if this 120 level holds and we see an opportunity to buy a bounce off 120, once it is actually proven that it has changed course, that could be a fantastic trading opportunity. Now, if you guys are interested in seeing my charts on a daily basis, where I share most of my technical analysis, most of my trades, and I tell you how I feel about the market and I participate in the conversations, then you should definitely consider signing up for my Discord chat and my watch list. That's where I share my weekly watch list, where you get the entire spreadsheet and all of my notes about how I feel about the market. You get all my technical analysis, and it's a group chat where I'm trying to encourage everybody else to share their trades, share their research, share their due diligence, and help everybody else make money. So if you'd like to join that, I highly encourage it. It's $5 per month, and there's a link down in the description below. There's also a lot more in there, so I highly recommend checking it out if you're interested in getting a couple more trade ideas and seeing how I look at the markets on a more common basis. Now, the drone industry, this is a big part of my portfolio. I've got a couple positions in the drone market. I'm actually going to share all three of them with you in the charts right now because I want to point out a trend here, and that trend is in the volume. So this is Drone Delivery Canada, and as you can see here, right at the beginning of 2021, we went from about 60 or 80 cents here to a high of $2.55. The stock basically tripled, and as you can see, the volume more than tripled. We were trading significantly more volume right here in the beginning and middle of February than we were in like pretty much all of 2020. And this volume here was an influx of investors coming into the market, probably like 50% retail and maybe 50% big industry and hedge funds and banks and stuff. But I think of it, a lot of it was retail. And so as you can see, massive influx of volume in here. The stock shoots up, volume starts to tail off, and the volume and the price slowly just falls all the way back down. Now we are currently sitting on a $1.38 to $1.40 level of support. And what I am looking for is an increase in volume, a crossover of the MACD, a crossover of the RSI coming out of the oversold zone, a breakthrough of the moving average, a breakthrough of this trend line, and if we can check all those boxes, that's what I would call a turnaround, and that's when I would add more to my Drone Delivery Canada position. If it falls below this like basically $20, $15 level here, that's where I'm going to have some concerns. I might trim the position if I don't see a bounce off that level, and I might save some capital and buy back in lower because I still like the company, but as of right now, there's just people leaving the market, and that's causing the price to drop. And now what's really interesting about this is that if you look at this volume here, it's pretty much the exact same on all of the different drone stocks that I'm in. So this is Draganfly, a company based out of Saskatchewan. And as you can see, 2021 hits, and basically all of January here has significantly higher volume than pretty much any point in 2020. And that drove the stock from like a 50, 60 cents all the way to a high of like $4.20. So absolutely amazing movement here, and that was driven by the volume, and it's the exact same thing in Archer. This is a SPAC called Atlas Crest that is going to be merging with a company called Archer. The ticker symbol is ACIC, and as you can see here, absolutely massive volume here at the beginning of February, drives the price up all the way to a high of $18.60. Volume starts to tail off, the price falls lower, and now we are sitting on some support. So what I am looking for again is a little bit of an increase in volume. People start to get back into the market, a crossover of some of these indicators, and that's going to give me the positive signs I need to start adding back into my positions in a lot of these drone companies. For the last probably 2-3 months, I've been trimming and taking profits, but now they're coming back down to certain levels where I'm starting to get interested in adding back into those positions. I've done extremely well on them so far. All of these positions except for Atlas Crest are up right now, but we're still doing pretty good overall as a portfolio. Now, if you guys are interested in learning more about technical analysis and even fundamental analysis, then definitely consider signing up for my stock market fundamentals course. That is where I have over 9 hours of content that walks you through step by step everything you need to create a trading strategy and learn how the markets work. There's over 3,300 students that have already taken the course. There's over 180 reviews from people that are just like you, that have given their honest opinion of what it's like. It's hosted on Skillshare, which is pretty much the Netflix of courses, and it's completely free when you sign up with the link in the description below. Now, lastly, the markets are a little choppy out there, especially if you are in a high growth or tech company. So make sure that you manage your risk, set a stop loss if you need it, and make sure that your portfolio is safe and secure. Capital preservation is the #1 rule, and it's better to hold cash than to lose money. So make sure that you're set up for success. And if you need any help, check out the resources down below. I also have my email down there. So if you want to reach out, I'd love to talk to you. Thanks so much, and we'll talk to you soon.